Welcome to Insurance Investments and All About Town podcast. Our podcast is dedicated to empowering listeners with knowledge they need to navigate home and auto insurance, health insurance, make smart investment decisions, and stay informed about local happenings. We provide insights and practical advice, helping you preserve your financial future while staying connected to your community. Tune in as we break down complex topics into actionable steps for a better, more informed life.
Perfect.
Welcome.
Hi.
Welcome to episode number 10.
Episode 10, we're back.
We're back. Another month here.
Yes.
So I always start, right? We shot our last one with a great guest. How many views are we up to?
Here we go.
Yeah.
33.
Very close.
Really?
Yeah.
Okay.
31.
31.
Yeah, 31.
Okay.
And it's only been out a couple weeks, 3 weeks.
Good.
So
I thought that was a great episode. If
oh my goodness.
if you haven't tuned in and you aren't familiar with Colonial Gardens and everything they have to offer here in our community and the events they do, Jessica did a great job.
She did.
Of really talking about all of their pick and or their you pick garden.
Yeah.
That I think the peaches are probably ready, so
they're
I better
probably
figure that out.
They're probably already picked over.
Probably.
But it was. I actually saw a billboard driving to work. They actually had a billboard up their concerts on Wednesdays.
Okay. Their Wine Wednesdays is those are a lot of fun.
Yeah.
I actually saw they just had a billboard contest. So, and I think it has to do with their U-Pick gardens.
Oh, okay.
And they've been slowly releasing like the finalists, but maybe not the final billboard yet. But I thought that was neat. It was something I didn't realize that the community was participating in. So.
Yeah, didn't realize that either. So, but yeah, she was a great guest, Colonial Gardens. If you haven't been out there, definitely check out Colonial Gardens. They have a lot to offer our community. So, well, what's new with you? Anything?
Oh, it's the middle of summer. It's hot as it can be.
Right.
Other than that, no. I mean, I'm sure we have some fun information, both of us, to share on some of the passing of the big, beautiful bill, right? That makes some changes for everybody. So, in case you did not catch episode 1, 2, 3, 4, 5, 6, 7, 8, or 9, I'm Tara Lavelle.
Which Brian hasn't.
Did not. No, husband still has not watched a single episode.
Right, I didn't even introduce us, did I?
No, he missed that.
Yeah.
But I'm Tara Lavelle with Von Fire Insurance Solutions.
I'm Eric Sporing with ECS Capital Investments.
Yep.
Yes. So, today we were going to talk a little bit about, I'm going to talk about, the big, beautiful bill just passed here right before the 4th. So I was going to talk about the overtime, the Social Security part, and maybe throw in a little bit of the Trump investment plan that they're throwing in for newborns. So I'll talk a little bit about that. I know today you were going to talk a little bit about men's health, and which I found interesting was some of the ratings from the local hospitals that just came out.
Yep. And
I'm going to be interested to hear how some of our local hospitals, here in Jackson County, rate or the Kansas City Metro, I should say. So, but jump in a little bit. Tell us a little bit about men's health and the ratings with the hospitals here.
Sure.
So,
Actually, I think I will. I'm going to start with some men's health risks and women's health risks. You're going to see some similarity between the two in not only some common health risks, but also how we prevent them. So some men's major health risks are going to be cardiovascular disease, right? Type 2 diabetes,
that's big.
Skin cancer, and prostate cancer. When we speak about women, we speak again about cardiovascular disease, breast cancer, ovarian and cervical cancer, lung cancer, and colon cancer.
Really?
The fascinating thing about colon cancer is that it is actually affecting younger women. So we are finding, we typically don't get screened. I think maybe it's 45 for colon cancer, but we are finding that specific cancer in younger and younger women. So 20s, 30s. So they haven't, found the correlation, the cause, but I think first and foremost, what we all need to keep in mind, whether male, female, is preventative measures, right? Some of those are lifestyle measures. So when we talk about things like cardiovascular disease, type 2 diabetes, those are lifestyle diseases a lot, right? So we can talk about your level of activity, obesity, how you eat, maybe your eating habits. So we can do things personally, make some lifestyle changes to decrease the likelihood that we suffer from those diseases or those health risks. At the same time, most of these, there are preventative screenings for. And so, especially, and I'm not trying to call you out, Eric, but especially in men, right?
Yeah.
We find that there's a source of pride in being able to say, I haven't been to my doctor in 10 years, right? Yeah. But a lot of these preventative screenings really are there to find things earlier. We can find early, and we can act on that, right? We can really change the course of how we're going to treat it, maybe how we're even going to cure it. So that's important for both men and women. Right. We each have very different preventative type services that are covered through our insurance companies. So I encourage everybody to go to the doctor at least once a year. Right. Exactly. Go for your free preventative annual checkup and really just talk about the things that you need to have done to check for some of these really common health risks. That's really it on my men and women's health risks, just a little PSA to get yourself checked out and really make good, healthy decisions for yourself. And then be proactive. Be proactive. Do the preventative things you need to do. I know that a colonoscopy is not number one on the list of things you want to do this year.
Not fun.
But taking care of those can really catch some things early.
Yeah.
So that there are different, different treatments that can really, we can intervene early and take care of those things.
Yeah, I know you were picking on me, but you had every right to pick on me because it had been a while since
I had a feeling.
Yeah, it had been a while since I'd been to the doctor, and it was as easy though as here in our office building, a lady right across my hall, she's a nurse practitioner, and I just sat down with her one day and was talking, and she can do a lot of the blood work and stuff instead of going to my doctor. And that's what we did. We sat down, I did some lab work, and she went through, all the tests, and, obviously I still, colonoscopy, I need to go have, that done. But, I felt like is better than doing nothing, right? And doing some blood work. So it was very easy to do, just to have her, do the blood work. And
get it taken care of.
And you take care of it. So, but thanks for picking on me.
You're welcome. Anytime. I read a really interesting article about hospital ratings here in the Kansas City area. So there is a company called Leapfrog, and what they do is biannually, so twice a year, they do hospital safety grades.
Oh, okay.
Okay, for hospitals all around the country. Those grades range from a letter grade of A all the way down to F.
Okay.
And they are re-rated every 2 years.
Okay.
And they're really based on 5 categories. Okay. So those categories are infections, problems with surgery, safety problems, practices to prevent errors, and then staffing levels and education. Okay. So they take those 5 things into consideration, and then they give a letter grade. Good news, there are no D's or F's in the Kansas City metro area.
It's good.
Right, that's fantastic news, right? No D's or F's. However, we do have our share of A's, B's, and C's.
Okay.
Here locally, right, most of our listeners are from the Blue Springs area. We can congratulate both St. Mary's and Centerpoint on B's, which is really a fantastic rating.
Yes, it is.
Probably the only local that you would know of or semi-local that ranked as an A was St. Luke's East.
Okay.
So St. Luke's East ranked just a little bit higher. There's some pretty well-known ones that ranked lower. So I am not going to call anybody out, but I think the Kansas City Stars, who initially posted the article or published the article. So if you're interested in knowing where your hospital lies, just give that a quick Google search.
Oh, interesting.
Yeah, and I think you'll find it. But I was really pleased to see that both St. Mary's right here in Blue Springs, has really done a great job of working toward that goal and really doing a good job of that. So I was excited to see them as a B. Same with Centerpoint. Centerpoint is is it a level?
They're a trauma 1.
They are a trauma 1. So that's a that ER is busy.
Oh yeah, I mean,
Um,
anything that's bad is going
Yeah.
to them. So
Yeah.
to be a B with the
Yes.
level of care they have to have, that's pretty
Yeah.
good.
So I thought that was just an interesting article. I also read, I believe it is Providence that has chosen to close down their birthing center.
Yep.
So that's a change, here in Kansas City. It's
I also heard in it's research. Research is also shutting down, or they're talking about shutting down their birthing center.
their birthing center.
Yeah,
Mhm.
exactly. I read that as well. My daughter's getting ready to do an internship there, so I've been
Oh,
so
great.
I've been
Okay.
doing, I've been hearing about research more. So,
Okay.
yeah, but yeah,
I'm going to be pretty short and sweet today. I mean, I
Yeah.
know that you're going to dive into some pretty heavy stuff
Yeah.
with the big, beautiful
Yeah.
bill.
yeah,
The one update that I have for everybody on that is in regards to the ACA marketplace and subsidies.
yes.
So there were increased subsidies during COVID
Yeah.
for ACA marketplace plans. Those are set to expire
Mhm.
at the end of this year, and the big, beautiful bill did not renew those. So what we can expect to see is a big change in subsidies. So what that will mean for the consumer is your health insurance is about to get more expensive.
Yeah.
When the subsidy decreases, the cost to you is going to increase. So as your open enrollment period opens up, which I believe is November 15th, it is a good time to revisit your
Yeah.
plan, right? The cost of that plan. And then keep in mind, we've said this a couple of times, Aetna is exiting the marketplace. And so your choices are now going to be even more limited. I think here in Kansas City, we have access to Oscar, Ambetter, Blue Cross Blue Shield, UHC. Previously, Aetna was one of those, but when we lose that carrier, so
Yeah.
your choices will
right.
decrease.
Shrink. Yep.
Yep. And your costs are probably going to increase. So I think that's something important for everybody to keep in mind as we get closer and closer. It feels like all of a sudden we're midway through July, and before I know it, it's
Right.
going to be October.
So
So
it'll be here before you know it.
it will.
Yeah. Real quick on the hospital rankings, you bring it up because a lot of people forget about St. Mary's right here
They do,
in Blue Springs. And, it's nice to have a small community. And I say small, I mean, St. Mary's is not small, but Blue Springs is not a Kansas City or something like that. And have a hospital right here in our backyard, with going through a rating and a B-rated hospital. That's pretty good for Blue Springs to have, a hospital right here that's rated B. So,
Yeah. Well, and I think that, they may be a great future guest too. I know that they've gone through some, they have some special certifications that I'm sure Kelly could tell us a little bit more about, but we'll definitely keep that in mind because I think he'd be a great guest.
Yeah, I agree. I was thinking the same thing
Yep.
when you were reading through that. I was like, oh, that might be a good guest to have on our show. So, well, let's shift gears a little bit. Thanks for that information. That's great information. I'm going to tackle the big, beautiful bill, right? There's a lot of stuff in there. Not going to tackle it all, but, some of the things that, people have been hearing about, right? The Social Security, no tax on Social Security, no tax on overtime pay, tips, those things. And also, the Trump investment, they're called the Trump investment plan for newborns. So, but let's dive into it real quick. Talking about overtime pay. The big thing was, hey, we're not going to be taxing you on any of your overtime. So, overtime pay remains fully taxable still. It's not that it's not going to be taxed. There are special exemptions for overtime income. And so for it to be federally exempt, you're going to have to fall into one of those little categories to where it's not going to be, taxed. So when you hear that, overtime tax is going away, it's not entirely true. You're still going to have to pay taxes. And keep in mind too, it's federal tax. It's not state tax. You're still going to have to pay state tax unless the states, come out and say, hey, we're going to follow the feds, but if not, you're still going to have to pay state taxes on it. And then, it's also, you still got your FICA. I mean, you're still going to have to, they're not going to get away from Social Security.
What? We still have to pay our Social Security and Medicare tax on that?
You still have to pay. And so, that's, one thing, it will boost your pay a little bit, if you're not going to have to pay, Social Security, pay federal taxes on your overtime. But just wanted to be clear, it's not all tax free for everybody. There's going to be special limitations for it to be, federally tax free.
So you're saying these big, general, sweeping statements.
Yep.
There's more to it than that.
Right.
Is what you're saying.
Right. They're basically what they're calling them is tax credits, right? That's what they're calling it. If you qualify, you get a tax credit against your, your overtime. And so that's how it's going to be, like I said, beneficial for people working at. And kind of the same thing too with tips. I meant now tips are going to be a little bit, different. Tips will be exempt from federal income tax. You're still going to have to report your tips. But once again, those will be federally exempt from taxes. Now, backtrack a little bit too. You still have to pay state taxes on it. Everything we're talking about is federally exempt, unless once again the states step in and say, hey, your tips, we're not going to tax them. But federally, they will not tax them. So that's a good thing, right? And so it's going to allow that service industry. That's where we see a lot of tips, right? The service industry. So you'll start to see those wages, right, increase where it'll make it maybe a little bit more attractive because I know those industries, those service industries are having tough time, hiring people. And so this would be a way for them, maybe get workers back into those fields. So it'll also help them too when it goes to credit, right? Because they'll now be able to show that as income before. And look, I'm not a lender, but I know enough to be dangerous that, they can't use tips, when it comes to buying a home or buying a car. So this will help, that industry be able to, show that income.
Okay.
Now, one thing I didn't bring up here either is, look, these are only in place for the next 2 years. This isn't ongoing. The big beautiful bill, this is written in that it starts in 2026 and ends in 2028. So this is only for the next 2 years that we see these things in play. Now, that can always get extended, right? But right now, people need to realize that this is only for the next 2 years. And then, one of the other things I wanted to visit and talk about a little bit is, like I said, the custodial accounts. Kind of the same thing. It's only for the next 2 years, but a child born between, now and 2026 and 2028 is the government will put $100,000.
Oh my goodness, sign me up. I'm having a baby.
No, $1,000. They'll deposit $1,000 into every child's account that is born, like I said, 2026, 2028. Beautiful thing is you can still contribute to it up to $5,000 a year. So it is an account that you can fund, money into a year. So it will grow over time. You can pull money out of it for 3 things: education, buying a home, if you're starting a business. Those 3 things you can pull it out tax-free, penalty-free. And that's starting at age 18. That's when you can do that. Okay.
Are your contributions to that tax deductible? Have they said?
We have not heard that yet. It's interesting you bring that up because businesses can put up to $2,500 into those accounts, and that is tax deductible for the business, I do believe. I'm just reading my notes here. I don't know that is deductible. I don't see anything here. It could be. Not enough has come out yet for that, but a business can do $2,500. So that's a benefit that a business can say, hey, we match $2,500 to each child's account. So it's a good benefit. But you brought something up, or you didn't bring it up, but you said something there on the contributions. This is a taxable account. If you pull money out of it, it is taxed as ordinary income. If it is not used for one of those 3 things I mentioned. So if you're contributing to this, and I think you and I talked about this, we've seen numbers that this could grow into the millions if you keep contributing to it and it grows and you don't take it out to age 65. with this certain amount of, rate of return, it could be a substantial amount of money.
But still, you'd have to use it for one of those
Those three
three things.
right.
Okay.
For that
For it to-
portion
yeah.
to be not taxable.
Okay.
But like I said, anything outside of that, this is a taxable vehicle.
Okay.
And so not saying that this is a bad thing to, put in play for, the younger generations to start saving, but there could be other options out there that are a little better. But I like the thinking here of, hey, let's, give them a head start.
Yeah.
So, but I found that interesting. Now, there are age limits. I said you got to start this at age 18, and there's just a certain percentage that you can take out during that time. So the first age is 18.
Okay.
And I think it is like 50%. And then you can do partial access at 18, which is 50%. Then age 25 is another percentage.
Okay.
And then once you hit age 30, then you can take the full amount
Okay.
out. And at that point, that's when it becomes, taxable if it's not for, one of those other three things that I mentioned. Even at 18, 25, as you're pulling those out for one of those three things, it's not taxable. But if you're pulling it out for anything other than that, then at each one of those stages, you could pay a penalty in taxes.
Okay.
So, but that is just a little bit, just a 50,000-foot overview of kind of these plans. Like you said, it sounds great. It's not taxable, but look, there's tax credits. If you don't meet those tax credits over time, you're going to pay. Even Social Security. I don't even know if I touched on Social Security, but they're talking about Social Security not being taxed. Once again, it's not true. You still have to pay taxes, but you may get a tax credit to where then you don't have to pay taxes on the Social Security. So once again, I don't even think I touched on that, but it's the same thing.
Okay, that was my understanding too. Like I saw no Social Security tax, and then I'd read into it a little bit more, and they're like, no, you're still going to pay taxes on your Social Security, but you could qualify for up to, what is it, like a $6,000 tax credit?
Right. It's 6,000 single, and I think 12,000 for a couple, if I remember right. I think it's in my notes here somewhere. But yeah, you are correct. I think it's 6,000 individual, 12,000 for a couple is what the brackets are, as what the benefit tax credit would be. Yeah, you're exactly right. So, but yeah, I just want to kind of share that with our audience of and look, we still don't know a lot of what's in that tax bill, and things are changing. Tax codes haven't been written yet. We could probably get our buddy Lauren, I think from episode 3 on, and he could probably. He probably doesn't even know right now what those are looking like. That's why it's 2026, right? Because they got to write all this stuff into the code, and tax codes, tax laws, and so we're still probably going to be changing some of this, as we go. But anyway, that's just kind of what I wanted to share with you guys a little bit about the big beautiful bills. So
I know there's some talk too, and I didn't hit on it. Right, some talk too. There had been talks of Medicare cuts, Medicaid cuts. I don't think there will be no changes, no cuts to Medicare, but Medicaid, the cuts they're talking about will be, work or volunteer requirements, and I'm sure they'll still ironing all of that out. But I think the estimation really is between the cuts to Medicaid and the cuts to the subsidy in the ACA marketplace, we could see an increase to 20 to 30% of people who flat out cannot afford health insurance.
Really? Wow, that's crazy.
And so that will, I mean, it will be interesting. There's certainly some changes yet to happen, and I mean, we're still waiting to see how it will all exactly play out.
Right.
But,
even in my world, like I said, with the the child accounts, and that, like I said, you're probably right. There's probably some things in there we're still going to learn about.
And you said, I'm sorry, for those, it's children born between 25, like
2026. That's when everything
27
and 20,
and
it'll
28.
expire.
Okay.
Yeah, it'll expire. No, I apologize. It's telling me here 1,000 for born January 1, 2025 through December 31st of 2028.
Okay.
That's what it's saying here. I thought
so. If you had a baby, this year, keep your eyes out. There'll be a way for you to
unless like things get changed. But that's kind of what I was reading in the big beautiful bill right now.
I have a feeling we will revisit some of these topics before the end of the year.
Probably,
Yeah.
right? And so, but you know how I like to end with a little bit of, some.
Oh, he's going to pick my brain and make me think.
No, I'm not.
Hey.
I'm not going to pick your brain today.
Oh,
So I'm just
okay,
gonna
good.
give
I don't
you-
have to guess anything.
You don't. So 4%.
Okay.
That's the magic number.
Mm-hmm.
Okay. The first 6 months of 2025 saw the S&P 500, so the 500 biggest companies in the United States, and the Bloomberg Aggregated Bond Index. Won't get into those weeds.
Yeah, wow.
It's a bond fund. The Bloomberg Aggregate Bond Index both gained 4% in the first 6 months. Since 1990, in the 4 other years when the stocks and bonds both gained 4% in the first half of the year, they traded higher in the second half all 4 times, with a median gain of 12.6% in the S&P 500 and 4.5% in their aggregate bond fund. So keep that in mind. Last 4 times this has happened, we've actually had a good return in the second half as well.
I like that.
So hopefully history repeats itself.
Let's hope for that.
Right. So, but it's kind of all I had to share today.
Okay.
So, what else you got? You got anything else?
I don't. I've been thinking, we usually have a hot seat question, but we don't have anybody to ask it to today.
Well, I got a hot seat question to ask you.
Okay, let's do it.
So, we do the podcast, right?
We do. Yeah.
So, if you could change with just one person, anybody in the world, to do this podcast, who would that who would
who would be my stand-in?
Who would be your stand-in if you could be, change the bodies with one person? Who would you want to do the podcast? Who would
Eric, that's the hardest.
Oh, it's not that hard.
It is. Yeah. I'm trying to think of anybody that,
like
okay, tell me yours. Maybe that will help.
Really help you, right? So I was thinking about this, and I'm like to joke around a little bit. I'm a funny guy, kind of. At least I think I am. I'm probably not that funny, but probably I'd have some comedian.
Okay, because that's the direction I was headed.
Yeah.
But I don't know, when it comes to female comedians, I actually don't know a lot of comedians, period. Stand up isn't my thing, but the one that comes to mind is, I don't know, I know Nikki Glaser, but I'm like, oh my goodness, that would take this down a very, very different path. So I'm not sure about that one.
I'm an 80s guy, right?
I will tell you, I know the way to get my husband to watch. If Jennifer Aniston were my stand-in, I would get Brian to watch one of these episodes at least.
You'd be able to do that.
Yep.
Yeah. So I guess we could do a Friends if we had to pick one of the Friends cast to do it. So I'd have to do a Chandler. If we were doing a Friends, Chandler. So
I always liked Chandler. Yeah. I was actually a big Ross fan because I'm like a closet geek. And so I can't remember if he was paleontologist, museum curator, or something. Okay, was that it? Yeah. So I do have a soft spot for all the geeky stuff. Yeah, my family loves to pick on me. Yeah. So they know in 4th grade I asked for a microscope for Christmas, and they remind me of it all the time. So here we are.
Did you get that microscope?
Of course I got. I mean, I looked at everything I could think of under those glass slides. It was a good time.
Good time, fun time. And now,
Labor Day's coming up.
Is it?
It is. Yeah. I mean, if you think about it, right?
Is,
by the time this airs, we'll be in August.
Right. Yeah.
You have plans?
Speaking of that, kind of that nerd.
Yeah. I'm excited.
So I play fantasy football, right?
Oh, I almost was going to ask about fantasy football.
So I'm in 4 leagues that I play in.
Oh my goodness.
And we always have a draft on Labor Day.
Okay. So that's a good time. I know that my husband has a couple of drafts coming up, but we were looking for something to do. So yesterday I developed this plan. I think we are going to take Friday off before, drive to Louisville, Kentucky.
Okay.
And we're going to spend the weekend and do some of the bourbon trail stuff.
Okay.
So he's a big bourbon drinker. Yeah. I find it to be disgusting, but I do love new cities, exploring new places. Yeah. So I think I found our hotel. I think we're good to go. So I'm looking forward to that.
That'll be fun.
Yeah.
I have been to Louisville, Kentucky.
Okay.
Been there once. I spent a couple hours in a bathroom in my hotel because there was a tornado warning in,
Okay.
and I was
Yeah.
staying one of the top floors in the hotel.
Okay,
So-
I'm going to hope that that is not what we do.
So I have been to Louisville, Kentucky.
Yeah,
So,
I think it'll be fun. I know we can, with Brian being a bourbon fan, there's all sorts of distilleries
Yeah.
there. Obviously, they also have a like Brewers Row, probably,
I'm
or
sure,
so a brewery scene,
Yeah.
which we all know. I like that. But I think we could also, I'm sure you can tour the Louisville Slugger facility.
I was just getting ready
Yeah.
to tell you, when I went, I was actually a sales manager for a candy company here in Kansas City, and that's the reason I was in Louisville. Louisville Slugger was one of our clients,
Okay.
and I got a behind the scenes tour
Very
of
cool.
like they were making bats, and I got to hold a couple Major League Baseball players' bats actually in my hand
Oh.
that they made for each player. That was actually very my son plays baseball,
Right.
that.
Yep.
And so it was very interesting for me. I mean, they were talking about how Ted Williams, here I am getting all geeky, how Ted Williams, one of the greatest hitters in major leagues ever, he could pick up his bat and he could just tell if it was just an ounce off. He could just pick
That's
it up and
fascinating.
tell. Yeah, so it was interesting to do. So I was going to mention that. Hey, go to the Slugger.
Okay, I might try that.
the
I'm
Slugger.
always a sucker for a walking ghost tour. So if you haven't been on like the, like ghost walks where they take you through the city and tell you all of the different, ghost stories. It's cheesy, but it's always fun. So I think we'll have a great time.
Yeah,
I'm looking forward to it.
I
So.
looked. You got Churchill Downs is there too.
Yes, I was going to say I didn't know which one. I knew, something about it.
Kentucky
Kentucky
500. That's the Indy 500.
That's the Indy,
yeah, Kentucky Derby. So.
I also did not realize that Louisville is just across the river from Indiana, or is that it? Indiana, Illinois, Indiana. I'm terrible at geography, by the way.
Yeah, it's Indiana.
So I feel like we could, Brian and we're trying to hit a craft brewery in all 50 states. So like if I can just cross that
over.
bridge, because I can't think of another reason, I'm going to be going to Indiana. So maybe try to do that.
Yeah, and I'm trying to think where it's at Louisville, because I think you're right. It is Indiana. As I'm staring off into space, I'm looking at a map.
Is that map working?
Yeah.
Yeah.
So, but yeah. Well, that's
my
awesome.
map would have been blank if I was staring into space. That's just not my area of expertise. But
so mine either. So, well, that kind of wraps up our episode 10. We'll be back for episode 11 next month. Once again, just be you and I. We do have a guest lined up for September, and so we'll have a guest on. But we are done for today on episode 10. Once again, Tara Lavelle with Von Fire Insurance. I'm Eric Sporing, ECS Capital Investments. Have a good day. We'll see you back here next month.
See you
later.
next time.